So we've come to the last section of chapter 9. I know chapter has a lot of information and a lot of calculations, and don't worry, you're going to get to practice all of that in your homework, I promise, but just a couple of more things that we need to talk about. So besides having plant assets, there's a couple of other categories of long-term assets that we need to talk about, one of which are natural resources. So natural resources are assets that come from the earth that are consumed. This would be things like diamonds or gold or even lumber and oil and natural gas, anything like that. Now, if we happen to own, let's say, a diamond mine or land that oil is found under or um, land where there's natural gas, then we would get to record those natural resources as an asset on our balance sheet. We would record them at whatever we paid for them. We would not depreciate those assets, but we do use a process called depletion. Depletion is very similar to the units of production method. So if we're talking an oil well, then they would estimate, for example, when they drilled oil, they would estimate the size of the well. They would estimate how many gallons were in there and what is that worth. That's what we would record it at. And then every year as they pumped oil out, we would deplete it, pardon me, using kind of that units of production method. How many gallons had we depleted? I'm not going to ask you to compute depletion expense or record any of those entries. I just want you to know that natural resources would be recorded on our balance sheet and they would be depleted. Now, the last category we have would be intangible assets. Intangible assets are assets that don't have a physical substance, but they give us rights or privileges that are valuable to us, and so we get to record those. Some examples would be if I am a drug company and I have a patent on a drug, then obviously I own that. That's valuable to me. It gives me the exclusive right to produce that drug, so I am going to record that at what it costs me to get that patent. Copyright, again, would be on works of art. You have the exclusive right to that song or that poem or that book, whatever. Trademarks, and any other creative works, licenses, franchise fees, Goodwill. We'll talk about that one some more in a minute. Now, one of the things that is not an intangible asset is research and development. So research and development does not get capitalized. We don't get to record that as an asset. It is expensed. Once the research and development produces something that, let's say, we're going to patent, then the cost of getting the patent, defending the patent, all of that stuff gets capitalized, but the research and development gets expensed. Now, intangible assets are again recorded at cost if I purchase them. Most intangible assets that have a definite life, like for example, a patent is only good for about 25 years usually, then those are what we call amortized. Amortization is like straight line depreciation without a residual value. Again, I'm not going to make you compute intangible asset amortization. I just want you to know that intangible assets are amortized. I also want to point out that we're going to use the term amortization and amortized in chapter 12 when we talk about bonds. Bonds are amortized. Bond amortization and intangible asset amortization are two completely different things, and I really don't know why we use the same term for both of them. Now, not all intangible assets get amortized, such as if something has a like a trademark. So let's say Nike has the Nike swoosh trademarked. That doesn't have a definite life. We don't know how long that's going to be useful for. So that would not be amortized, but those assets are tested for impairment every year. So every year we'd have to look at and say, okay, is the Nike swoosh still valuable? I think it is, so I'm going to leave it on my books. Now, I will absolutely ask you about Goodwill, so you want to star, highlight, underline this part of your notes. Goodwill happens when we buy another company. So let's say that we are Disney. We're Disney Corporation, and several years ago, Disney Corporation bought out Lucasfilms, which Lucasfilms is named for George Lucas. It was his company and is all of the Star Wars films. Now, according to financial theory, when Disney bought Lucasfilms, they should have looked at the Lucasfilms balance sheet. They looked at all the assets listed there. They would estimate their fair market value. They would subtract all the liabilities, and that's how much they should pay for Star Wars. Now, I'm going to tell you, Disney paid a lot more than that for Star Wars. Because if you look at Star Wars, the Lucasfilms assets, they're not a whole lot. I mean, it's the Millennium Falcon, but, but the value of the Millennium Falcon is not in the Millennium Falcon itself. The value of the Millennium Falcon is what Disney can do with that when they own it. So they were willing to pay a lot more for Lucasfilms than just the net fair value of the assets on the balance sheet. So that amount that they paid over and above is what is called goodwill. And so you only get goodwill when you purchase another company. That's important for you to know. And goodwill is not amortized because it doesn't have a definite life. But goodwill is really important. So I would encourage you to go look at some companies, especially if you know that they bought another company, and go pull up their annual report. Look at Disney or somebody like that and pull up their annual report and see what they have goodwill recorded at. That's an important value. So really important of what that is.